Welcome to Trading Lounge and the European indices for Thursday, September the 22nd, close to the equinox, and also too, as you know, the Bank of England will do their rates at midday in that trading session, and look, probably the same as the Feds in terms of the Feds have done 75 basis points for 3 times in a row. So I suppose the BOE will do exactly the same. So based on that, I think the market sort of accepts that, and I don't see any sort of larger swings in the market, and nothing bigger than what we saw with the Feds. So minimal, handable, doable. So just be mindful of stops. Anyway, coming to the count, so just on the daily chart here, we're in a nutshell, we're looking for a move down into the 11,500, which will be basically the third wave at that point, and the fourth wave, and the fifth wave somewhere down here. So we're looking for 5 waves between these two here. There are different ways to count this move down here, but the main point is that there will be support here, as mentioned last time, at this 12,500, 5 being the second strongest number, so there will be that there, but we should see that be pierced after a little sort of supporting rally there, going back checking supply. So what I'm going to do now is I'm just going to cut straight through from 1 day to 100 ticks to just move along here a little bit quicker. So yeah, let's just get in some more data here. How much do we need? Okay, so from that wave 2 up there, as you know, we're looking for wave 3 to take us down to 11,500 down here somewhere. Right, so we've still got a fair way to go, and the 12,500 is going to offer, well, it's already offered good support. So we've had that, you know, like a ball bouncing. The next bounce here will be lower. So what we could look for there is a sort of well, this is where the it gets a little bit tricky because of the announcement. I think it's at midday or something. So, but still, if I could just stick a few flags in the ground, we'd be looking at this being wave 1 here, and then an ABC for wave 2. So, you know, will that hold stead with the rate? I don't know. It'll be a bit wobbly, you know. But that 500 here, once that becomes the retested resistance, you want to be looking at short trades at that point. If you see that market move back up into that space, then you can also look to short that as well. So the count here, so going from this wave 2 here, minor wave 2 down to minor wave 3, we're looking for 5 waves down. There's different ways to count it. I could count this as wave 1 and 2 here in blue. So for this wave 2 here in orange, we would need 5 of these, 1, 2, 3, 4, 5 coming down further. We could also count this as 1, 2, 3, 4, and 5 down here. Put wave 1 here and back for wave 2 on this one here. So that's also possible as well. There's a few different ways to count this. So the other way that's to count this as well, just to make it even more complicated, is to actually put wave 1 here, and then this wave 1 becomes this one over here, and this one here becomes this one over here. It's not a big deal at this point in time for all of this, but because it's still just going to do, it doesn't matter how you count it, it's still going to do the same thing, and that is move lower here, right? So it's not as this moves along here, I'll be able to say, okay, that belongs with that structure. So let's just get past the announcement from the BOE, and then we can label this. And we kind of, you know, it's we have to take each market as individually as well, but also in a group with other indices as well, and just not the other indices, but also with stock as well, and also too with currencies as well. So we've got to kind of get a consensus on things, and they're not all going to be the same, because this move down here in the US markets, it could be counted in 2 different ways. It could be counted as wave 1 and 2 here, and 1 and 2 here. It could also be counted down as 5 waves here. So I'm getting I'm getting, from the stock market, I'm getting 2 counts. So normally I'll just get sort of 1, and that would be as a consensus, but I'm getting a nice balance of 2 of them. So I'll just keep a bit of a note in mind before we close the book on that. But like I said, in the meantime, it doesn't make much difference. The trend is down. We're still heading lower, and we need to short rallies and short new lows, and don't overtrade, and have, less is more with wider stops. Okay, so enough waffling. Same with the EUROSTOXX here as well. We can look at it as 1 and 2, and 1 and 2, and 1 and 2. We could also look at it differently as well. I totally understand that, but in terms of making some money out of this, then this move down through here, essentially, we talked about being short under there yesterday, so we'll just leave that there. But you can see that this trend down here, a trend has a beginning, a middle, and an end, and obviously this is the middle here, isn't it? So we're looking for an ending pattern here, and the beginning of the pattern here had 2 little sort of 1 and 2 and 1 and 2 here. So this will be down for 3, 4. So it's possible in the off hour in the Asian session that we end up having another move down here before seeing a move to the upside here. And this move to the upside, so what you need to do is just not much at all really, is you just got to wait for that low to come in, and you won't know where that low is, or you may if you want to pull that apart here. But what we'd be looking for on the flip side with and this is the same with the DAX as well, of course, once the low is in place, and you won't know the low is in place until the market moves up here further. So when it does move up here, it's going to move up in some sort of ABC pattern moving up here. Now, because we're in a whole series of third waves, so the third of the third of the third of the third, and then we're also talking about a third wave here as well. We could put in, it's probably not the case of this degree of structure, but just for the purpose of the exercise, that means that we may not come all the way up to the 50-60% retracement level. We may just come up to the 40%. Okay, so we may put that at 40%, and we could turn that box green. And it doesn't mean that you need to overtrade or anything in this particular space. I mean, just have the smallest amount possible in this box, and then look to add to the downside. So you could add under the B wave here, because it'll be an A and a B and a C. It'll be a 5-3-5 structure. And also this is not quite on the 50 there, so let's just put that on the 50 there. So 34.50, that's the next important level there. So if you've got a classic trading levels pattern in there, when this comes back down here as well, this will bounce off the 50, move up here, move down through it, and then kick back and then move down. So you might be able to move this one, or if you're in there, that's fine, whatever. So current stops all need to be above here, and build in a little bit closer at this point, and then also look to the next biggest number on the way down is the 34. So I'll just put that in there, and before we get to the 34, between 34 and 35, you count the Fibonacci numbers 1, 2, 3, 5, and 8. So we go 10, 20, the power of 10, 30 here, and then we've got 50 here, and then we've got 80 here, which is group 2 in here. So we're looking here at group 2 here, where these swings were here. We're looking at that space in here, 3, 4, 6, 5, and these other little things, that group there, that should be the resistance for this to retest the supply from these old highs here. So this will bounce back at that point. Then what I also wanted to say was, when the 34 here becomes the resistance, using a classic trading levels pattern at this point, once that becomes the resistance, you got the first low below the level, then go short here, go short up here, and that sort of thing. So we want to add to the position, because we're going into a bigger move to the downside. You may also want to, when it comes into group 1 here, it's going to find supports. The first bounce was quite big. The second one here is going to be smaller. The next one's going to be smaller, but there will be a bounce there. But when the number 2 here becomes the retested resistance, the 20 here, then that's another nice place to add to, because when the number 2 becomes the resistance, this is group 1 here, when the 2 becomes resistance, then it gets pulled down to the 34. If you get pulled down to 34, it's going to wiggle and squirm and so on, and eventually find it as resistance, and then you just use the classic trading levels pattern at that point too. So this is the same with all the markets that you're looking at. So we're looking at more downside, and you know, the idea is to build in at the beginning of a trend, isn't it? So that's what we're looking at doing here. When you think about it, there's got a fair way to go. You may already have positioned, we had positions all through here, you may have hung into those, you may not have, doesn't really matter for me, but you know, this is wave 2 here. When you think about it, then we've got wave 1 and 2, 1 and 2, 1 and 2. This is the beginning of the trend, all of this here. So this has got a long way to go down. So these positions you really want to hold at this point, and probably Monday we'll see this pick up a bit of speed, hopefully, if we got the count right. That's always a big if, isn't it? You know, sometimes we get it, sometimes we don't. So, but we need to plan for it, and preparation and opportunity meeting is luck, and sometimes we'll get lucky and capture that trend, and that's what we're trying to do at the moment. But manage that your exposure, and as I say, less is more in the long run. The FTSE is the same as well. We can change that to wave 2, but probably still got a chance of being wave B there, but it doesn't matter. And the same thing goes as well. We can look at this as 1 and 2, and 1 and 2, and 1 and 2. I mean, that particular pattern will be in line with US banks, which is, you know, carries a fair bit of weight. Or we could look at it differently and put this wave 1 over here. There's different ways to look at this, and as I mentioned, I don't think it really matters at this point. I mean, of course everything matters, and you know, I'm not trying to squirm out of things, but I can see it being counted in 2 ways. So if you've got it counted differently, I wouldn't really worry about it. The main point is really that you know, this here coming down here, that might be the end of it at this point. I'm not quite sure. I have to pull that apart. 1, 2, 3, 4, 5 to there, so that's that 5. That could be that one and that one. That could be the low there, actually. So but anyway, like I mentioned, what we will see is some sort of ABC rally coming into play. If this is not, it may just go to here and then have one more low, so just be careful. But if you see it come up here somewhere, then you know that you need to be looking at a small position, because if you're unsure if to push the button or not, and you normally trade 5 contracts, CFDs or whatever, well, just put in 1. You know, it doesn't have to be the end of the world. But yeah, when we want to look to, once that's cleared there, we'll leave that low exposed, and yeah. So that's that. Over to the currency. So the US dollar index is pushing higher, which is also great for STOXX as well, because the euro and the cable will be pushing lower. So in this case, obviously there's going to be some, you know, vibrations here too, in terms of the cable, at least anyway. But from this low here, we've either got it as wave 2 or wave 4 here. I won't go into that at the moment. Based on the cable, it would be wave 4. So I'll take the conservative view, but I'm just going to leave this in the background here. So I'll leave this wave 1 in the background here, and we'll go for wave 3 and 4. And we'll look at this as wave 1 and 2, 1 and 2. 1 and 2 with a nice little 5-wave structure here, then 1, 2, 3, 4, 5 here for third wave, fourth wave, fifth wave for third, fourth, fifth, the third, the fourth, and fifth. So whichever way you want to look at this, we're going further up. So that means that the cable and the euro need to go further down. I think with the cable, I've actually got this as wave 3 here, so I've got a mistake somewhere. I'll need to check that, but it won't matter too much. This is going up, and the cable and euro is going down. So this is the euro here. We talked about shorting it yesterday at that point. That's the wave 4 up here. We're looking down for wave 5 here. So we've got further to come down in all of this. So this is 1, 2, 3, 4, 5 just for 1 and 2 here. and then we've got this wave 3 moving down here in terms of little 5-wave structure here for 1 and 2 that we noticed yesterday, then 1 2 3 4 5, 1 2 3 4 5 for third, fourth. See, I've got this, so it's a little bit different for these ones, but I'll figure that out. And this here will come down to the old lows here somewhere, and then have a little bounce here, and then go down for 3, 4 and 5 for this third wave, check it back at 98, and then go down again at that point. So yeah, you can look to short, on the rally here. You can short under here once it becomes the retested resistance as well. Here, I think we might just forget that one there for a moment, and we'll look at this wave 4. That might bring us, oh no, that will be all right. Anyway, we'll talk about this tomorrow, this little move in here. We'll just see what the Bank of England does on the rates, in case they do something completely, because they want to be different. Yeah, so wave 3 and 4 here for this, and then 1 2 and 1 2 here. So it makes sense here, doesn't it, when you look at it? If you compare this to the DAX or one of the other ones, so then it makes a little bit more sense. So yeah, either way, we've still got further to go down here for this. We've got 1 and 2 here, and then we've got 1 2 3 4, so we haven't even got wave 4 here yet. And you could probably get that a bit closer in there somewhere for that, really. But anyway, it might need to extend that down much further, so it doesn't really matter yet. But this 1 1 here will be the next target. And what I can also say, this between 1.1 and 1.2, the Fibonacci sequence 1 2 3 5 and 8. So they're the levels between those two there. These are minor levels, these are sub levels, and we could also go from 1 to 2 here and also have 1 2 3 5 and 8 in here. They would be micro levels at that point. But what I want to say is, when it comes into this area here, it's likely to be a little bit bouncy, so you need to keep the stops away from the market at that point. Don't get too, if you want to get to here, don't put the stops too close. You can keep the stop out the way up here. When the number 2 becomes the retested resistance, then you can bring it down on top of the 3 here. So it depends if you want to, how you want to, trade this here. If you want to get to this, if you want to get to 108 or 100 here, how close to the market do you want to get at that point? So, and this here from the top didn't really give me much extra at that point. So this is the top of the market here for this, and this is why I would look at, as you can see, we've got wave 1 here and 2 here and 3 here and 4 here, and going down for wave 5, which I don't have here at the moment, but it'll be there. Let's just plonk that in. So that will be wave 5. So that's that sharp move here as wave 4. That's why I've got this as wave 4 over here, right? And going up for wave 5. That would make the most sense of all of this. But I also understand too that the yields, if we look at the these are the Australian yields, we don't want that, so we just go to the US ones here, or the economy here somewhere, just to look at the 10-year yields here, just to give you a bit of an idea. We're looking, this is all of this is wave 1 and 2 here, then 1 and 2, 1 2 3 4 5 for the third, fourth and fifth here for the third, the fourth and the fifth up here. So that's 5 waves up there, right? So if that's 5 waves there, it's going to have a correction, and then it's going to have another 5 up. So that means the dollar could go much higher. That just makes sense to me. If I look at this on a weekly chart or a monthly chart or something, you can kind of, well, let's just go to the monthly charts for a second here. So they're the first little 5 waves that we're looking at here. So if I get 5 waves in the opposite direction of the trend, I'm going to get the 5 waves will take me to 5%, right? And then I'm going to have some sort of correction here as an ABC correction, and they're going to push up. So at minimum, I'm going to have an ABC up here. So, and possibly even a larger, if I get a larger 5 waves up here, then it's going to take us up further. I mean, the amount of money that's been printed and so on and so on, I mean, it's much more than what happened in the 80s. I mean, this to me is all pretty frightening, really. Yeah, buckle up, that's what I say. So it's possible to see this US dollar go much higher. So calling in a top here as wave 5, we will, but at the same time, I could extend it out further. That's all I'm saying. But anyway, always go conservatively first, and we'll get to here. We'll wait to see what type of correction that we get. If we do get a correction, well then, an impulse wave or a corrective pattern. Anyway, we'll go there later. But anyway, that's that. So short the euro, short the pound, short the indices, and it's pretty. It's pretty straightforward, really. Don't overtrade, and you'll make it to the other end. Alrighty, cheers.